Hello and welcome to Your Trades with me, Ankur Mishra and Kavita Thapalyal. In next half an hour, we'll discuss the whole week scenario for market and we'll also tell you what you should do for markets next week. But Kavita, this week we had two double centuries. One from Nifty 50, we are up around 200 points if you compare with Monday. And Bank Nifty 2 was up around 200 points too. But in percentage points, of course, not much support coming in from Bank Nifty to Nifty.
Absolutely, and what a week, and which is why today's Your Trade is very important because it's not only the roundup for the week, but then we'll also prepare you for the next week upcoming action. But then having said that, let's get you a roundup for the entire week. So as you rightly mentioned, Ankur, Nifty up over almost 1% this week and mainly led by auto and metals in auto, M&M and Tata Steel. But still we see the closing of the week below 25,000 mark for the 8th consecutive week. That's important to note. Nifty mid cap and small cap up almost 2.5% week. Talking about mid cap, top sectoral gainer this entire week we've seen almost 5 to 5.5% up, which was majorly led by Nalco and Jindal Steel kind of counters. Index also registered biggest weekly gains since since May 2025. So that's a very important level to note. But having said that, let's talk about auto. This entire index was up almost 5%, mainly led by M&M and Eicher Motors. Energy, again, we saw it closing the week in green. PSU Bank, we saw it snapping 2 weeks losing streak, mainly led by Canara Bank and PSBs out there. But then all the constituents of the PSU index, they lost in green. They were losing green the entire week. Talking about Bank Nifty, it closes in green above 54,000 mark, but a lot of experts also say that this is still a very oversold category, so a lot of upside potential there, but then we'll have to figure it out with our experts going ahead. FMCG advances for the third consecutive week. Imami, Dabur India kind of counters just led the entire rally in this pack, and IT sectoral loser declines for the second straight week, mainly dragged by Coforge and Persistent Systems. So that's the entire roundup for the week and also sector-wise performance. But then let's get you prepped for the next week. We have important guests with us, Mayuresh Joshi, Head Equity Markets Mindia, and we also have Rajesh Palvia, Head Technical Derivative Research at Axis Securities. Hi, afternoon and welcome to the show. All right, Mayuresh, what a week. And we still managed to close up 1% up, but then below 25,000 mark. What do you have to say on this?
Afternoon, Kavita. Afternoon, Ankur. I think on Ankur's comment that we hit two double centuries, I think the market is waiting for Brian Lara's 400. And I think that might come soon if Rajesh Palvia conquers. Having said that, I think the GST rationalization is a very positive move. And what this will basically do from a corporate earnings perspective is that it should start propping up volumes and margins from Q3, which is badly needed by India Inc. Obviously, I think the consumption slowdown that we had witnessed, we had started seeing green shoots of the same, both in terms of rural and urban consumption. And therefore, this is going to be an extremely welcome move. At the same time, I think if there is any element of resolution that happens in terms of the additional 25% tariffs that Trump has probably imposed over the next few weeks, my own sense is that the underperformance that Indian markets were probably going through and this long phase of consolidation, we might actually start coming out of it. Obviously, I think earnings are going to be the key trigger from a Q2 perspective. Because of monsoons, earnings might still remain a little bit under the radar. But with all these measures coming through, in my opinion, again, I think with Trump tariffs, what kind of a demand and an inflation havoc it can create across economies in the globe is something to be looked out for and watched out for. And therefore, I think if India is probably expected to perform better than the rest of the global markets, the FIs, FPIs which have been selling might be forced to come back as earnings come back. So I remain optimistic on the economy. My own sense is that earnings should start showing significant improvement Q3 earnings.
Right. Rajesh, I want to come to you for a technical check because 24,700 standalone, not a bad scenario if we compared with last week. But overall, with the kind of news we have had, do you think 25,000 resistance is still playing there, or you think we have the potential to cross that magical mark?
So, looking at the broader market action, there is no disappointment by the market. If we analyze the most of the sectors, every sector has shown, good amount of rally throughout the week. Yes, Street was expecting that, post this GST 2.0, there could be a, a runaway gap, and then, we may see a continuation of up move on the Nifty as well as in the bank Nifty. But yes, 25,000, the major call concentration area acted as a steep resistance for the market. And again, we have witnessed the supply pressure from those level. If we look at the last 2 3 month scenario, market is consolidating in range only, and 24,500 and 25,000. These two levels are acting as a resistance and support since last couple of months. And looking at the uncertainty from the global front, also geopolitical, Trump tariff, all these uncertainties still, not giving comfort to the market. That is why, traders as well as investors are not taking a big bets in the market. Very selective pockets are showing sign of consistent buying. Sector like automobile, FMCG, now metal, all these sectors are showing, and new age stocks, all these sectors are showing, consistent buying, but rest other sectors are still in the consolidation mode. The missing part for this momentum, the banking stocks are not contributing to any kind of, up move in this market. That is why Nifty is not able to take out 25,000 resistance area. So the structure for bank Nifty is still on the weaker side, but Nifty is showing sign of, giving breakout of this consolidation range. So looking at the data setup, looking at the technical structure, we are optimistic at this juncture, and we believe the kind of performance where we have seen in the across the board, we
Right.
believe that, maybe in the coming week we could see a breakout for Nifty and possible really
Okay.
towards 25,000, and beyond 25,000 we could see in the Nifty. On the downside, one needs to keep his stop loss towards 25,000, 24,450.
Okay.
And for bank Nifty, the immediate hurdle is placed at 54,300.
Okay.
If we able to take out this level, then here also we could see some short covering in the bank Nifty also.
All right, so some scope out there for Nifty 25,000 and beyond, but 54 350, a hurdle for Bank Nifty. All right, Mayuresh, let's talk about metal. Top sectoral gainer this week, almost a good performance that we saw post May 2025. Now, what do you have to say about this entire space, and what kind of trajectory can we expect? Counters like Nalco and Jindal Steel really leaded the pack.
Also, I think a lot of factors at play here, Kavita. I think the expectations of a US rate cut in September, the data points which are coming have been reasonably better. The India-China friendship, the ties that are probably expected to happen, that is probably propping up the sector as well. And obviously, I think in terms of expectations of decent amount of growth expected to come through in terms of volumes, because inventory levels are so absurdly low across the globe. Might lead to better pricing. So I think a combination of all these factors probably work together. But in my own sense, I think domestic focused companies might actually do a tad bit better because the volume growth will be there. You've obviously got some amount of import restrictions that have probably come through. And therefore, I think domestic focused stocks within this space should continue doing well. Obviously, I think you've seen stocks like a Coal India, NMDC, which are high dividend churners as well. Probably do well in the past week. But I think one stock that probably stands out at this juncture among the entire non-ferrous space might be Hindalco. Aluminium prices expected to inch higher as we speak in the coming few quarters. They've got backward capacities as far as alumina and bauxite are concerned. And therefore, I think Hindalco, at least on the ratings and rankings, looks relatively better placed. Within steel makers, our own sense is that JSW Steel a tad bit better placed because of the domestic synergies that they probably have and the backward integration capacities that they have probably built.
Right, Mayuresh, I want to understand from you, Indian economy has got three booster doses. First, S&P upgrade, then you have got Q1 GDP at 7.8%. Also now, GST announcements have been made. Still, the disease remains, we are still not reacting the way we should have. Do you think there is still tariff overhang? Or, as you mentioned earlier, The earnings number needs to be seen. Only then market will react. But that will happen in Q3.
No, so Ankur, I think it's going to be a combination of both these factors, right? Because the markets should get a sense of earnings showing a reset. And then that should happen. I think Q2 will provide a base for the earnings support that will largely be needed by the markets. Q1 numbers were relatively in line with estimates. So I think it was not a huge miss as far as earnings estimates were concerned. And obviously, I think what Trump does with his tariff imposition, specifically as far as India is concerned, I think he's going to be on top of mind of foreign institutional investors. Obviously, the domestic investors have laid faith in our markets. The kind of SIP movement that we are seeing still continues to remain extremely strong and robust. And therefore, I think as we see resolutions, as I said and I mentioned earlier, Q2 will provide a base. Q3 is when you will start seeing actual numbers coming out in a very positive fashion, in my opinion. And as the markets sense that, and markets are always a mechanism which senses things a few weeks, a few months ago. As they start sensing this, I think they will probably ensure that the earnings trajectory probably sustains itself. And I think the kicker would be any resolution on the Trump tariff front. Obviously, markets are not cheap, Ankur. I think from a valuation perspective, compared to your standard deviations, mean standard averages as well.
Right.
No longer cheap. So I
So
think you need to have a
one
sector
little update, since we are talking about tariffs. So one little update from the Truth Social status of Mr. Trump. Looks like he's saying, looks like we've lost India and Russia to deepest, darkest China. May they have a long and prosperous future together.
So that is now setting the tone for
Actually,
India-US
exactly,
relations.
Yeah. Rajesh, any comment?
So, Mr. Trump is beyond anyone. Like, no one can predict what kind of,
Totally.
comment, what kind of statement he may make. So, I don't know what's going to happen and how this battle is going to end. So, we don't know how much
But
time
what
it
about
will take.
November now? Mayuresh, what about November? Because these kind of comments, you think again we are stuck with the deal?
No. So again, I think nobody knows, right? And with Trump,
Yeah, I
I
mean,
think
that's
even
there.
he's
With
not
Trump,
sure on
nobody
what he's going
knows.
to speak, right? उनको भी पता नहीं है कि आपको वो क्या बोलने वाले हैं truth social पे. So I think that's the problem with Trump. Now the issue here is that he's clearly got rattled with the photographs that have come through of Modi, G,
Absolutely,
and
yeah,
Putin.
that-
So I think he's trying to fire all guns in his ammunition to probably rattle it.
But in a way, it is a win-win situation for India. We have taken a diplomatic stance and we are sticking to it. And more importantly, the discussions are still continuing. So on that front, Rajesh, I want to understand from you, in this scenario, which of the sectors one should focus on? We spoke about IT earlier. It has got some advantage due to rupee weakness, but even that has stopped now. Do you think particularly FMCG, IT, one should still focus at least for the next week?
So, Ankur, clearly four sector which is in my mind, which are showing a sign of strength, and I think again the GST reform will also give the benefit, direct benefit to all these sectors, and technical structures are also looking very strong. So, first one is automobile, second is FMCG, third one is new age stocks, and fourth sector which is now showing a sign of strength, which is metal. So I think these three, four sectors one can look at for near term to short term perspective till our Nifty not manages to cross 25,000 level. I think these sectors are likely to perform well. And from these sectors, lot many stocks have already given a breakout. So I think here is the opportunity to play for near term to short term to get the advantage of this volatility of market.
Mayuresh, if I want to understand from you, which are the sectors one should avoid now? Because we know most of the news now. Tariff uncertainty is there, but we have seen the worst case scenario. So now what should investors do in this context?
So I think you should have a sector-wise approach, as simple as that. And in my sense, again, I think a few sectors which probably might not get affected by whatever Trump is doing might continue doing well. So Rajesh mentioned a few within the consumption basket. I think FMCG as a basket selectively might continue doing well. Marico probably remains one of our top picks in terms of rating rankings at Markets with India. Volume should show an uptake, margin should stabilize because input costs have largely stabilized, and that leverage should start playing on the bottom line. A few of the apparel makers, the domestic apparel makers, with GST rates now getting rationalized to 2,500 rupees. My own sense is that a few domestic apparel makers and manufacturers, and where a large bulk of their sales happen domestically, I think might continue doing well with consumption expected to go higher, both for rationalization and rural and urban discretionary incomes expected to go higher for better monsoons and tax cuts. So Vishal Megamart, V-Mart retail, as an example, can continue doing well. Footwear stocks, I think the risk reward is extremely attractive at this juncture. And the same logic probably applies as for FMCG and other discretionary items. So I think stocks like a Relaxo, Campus Activewear might actually continue doing well from a risk reward and evaluation and an earnings perspective as well. And last but not the least, I think hotels. I think hotels as a space has nothing to do with Trump tariffs. I think with rationalization happening here, expectations of a travel boom, the average room rates expected to remain largely stable. Hotels are doing a lot of leveraged options, including managed properties, which is keeping their debt levels in check, and therefore return ratios, margins should remain very, very superior. So stocks like ITC that you're flashing is something you continue holding. Lemon Tree is something that you remain positive about. So I think these sectors might continue doing well, along with capital-oriented sectors which are domestically focused. I think urban capex, capital good expenditure on the government side, and private capex should ensure domestic capex-driven manufacturing companies should also do.
Right. Rajesh, one stock check I want to take from you is BSE. Now, it has gained momentum today, and that has been in focus for a while ever since the expiry days were about to be shifted. It has happened now, but BSE remains in positive territory on the back of the data which has come in so far. What are your technical charts saying on BSE, and also what are your stock-specific recommendations for next week?
So from oversold trajectory, we have seen pullback action from for BSE, and almost today's close is almost coincide with the 20-day moving average supply area, which is placed at 2350. So in the coming week, we have to see that whether the stock able to take out 2350 or not. If it's able to cross this level, then maybe some more short covering action we could see in this counter, and possible extension of rally towards 2400, 2420 we may see in the near term perspective. Those who are already long in trade can hold the position with stop loss of 2250. Moving to the stocks for coming week, first one is from the metal space. Very strong buying action throughout the week for National Aluminium. Stock has almost registered 14% of gain during this week. And if we analyze the weekly structure, it's almost 12 to 15 week consolidation range breakout. So looking at the breakout, we believe that this stock has potential to continue furthermore upside. The target where we are projecting is 225 on the downside. 207 needs to keep as a stop loss. The second stock is from the NBFC space, which is Bajaj Finance. If we analyze the weekly structure, stock managed to view breakout of falling trend line on weekly chart. Stock has shown a long built up on week basis. So looking at the data and technical structure, we are holding bullish view for this counter. Projecting target of 975 on the downside, keep stop loss towards 915.
All right, these are the stock-specific recommendations coming in from Rajesh. Thank you so much for joining at this hour, Rajesh, as well as Mayuresh. And with this, it's time for a wrap in this edition of Your Trades. Thanks for tuning in, and happy weekend to all of you.